So, something really weird happened in the Indian stock market this past week. It managed to hit an all time high, but at the same time, a lot of investors actually ended the week having lost money. How on earth is that possible? Well, let's break down exactly what went on during the week ending December 12th, 2025. Yeah, that's the big question, isn't it? A market at its absolute peak, yet somehow investors are down. It sounds like a paradox. And digging into this puzzle, wow, it tells us so much about the powerful forces that are really shaping the Indian economy right now. So let's get into it. Okay, so the week kicked off with a huge bang. On Friday, there was this massive rally that pushed the big indices, the Nifty 50 and the BSE Sensex, into brand new record high territory. You'd think everyone would be celebrating, right? But here's the catch. If you actually zoom out and look at the whole week, those very same indices finished down by about 0.5%. A record high and a weekly loss, all in the same breath. Talk about market whiplash. So what in the world is behind this market madness? Well, it's basically a tale of two completely different stories playing out at the exact same time. On one side, you've got some amazing news coming from overseas that really lit a fire under the market. But on the other, the story back home in India is, well, it's a lot more complicated. All right, so the big positive push came from the United States. The Federal Reserve, their central bank, cut interest rates. Now, think of that like opening the floodgates for cheaper money to flow through the global economy. It sent this huge wave of optimism across markets everywhere, and you can bet India was riding that wave too. But while the rest of the world was kind of popping the champagne, back home in India, things were a lot more turbulent. The economic numbers coming out were just pulling in totally opposite directions, creating this perfect storm of uncertainty for investors. And before we dive into all that data, let's do a super quick definition. The repo rate. Just think of it as the wholesale interest rate. When the RBI, India's central bank, cuts it, it's like putting money on sale for banks. That makes it cheaper for them to borrow and then hopefully lend out to businesses and people like us to get the economy moving. And hey, it wasn't just the US. India's own central bank, the RBI, did the same thing. It cut its key interest rate. So on paper, you're looking at a double whammy of fantastic news for the market. But as you're about to see, it just wasn't that simple. And then you get this number. 8.2% GDP growth for the second quarter. That is a huge number. It's an absolutely glowing sign of a booming economy. You'd think this alone would have sent the market into a total buying frenzy. But, and this is where it gets super confusing, at the very same time we're seeing this incredible GDP growth, industrial production basically grinds to a halt, growing at just 0.4%. And that was the first big crack in what looked like a perfect picture. A huge red flag for anyone paying attention. So yeah, this slide just perfectly lays out that tug of war we're talking about inside the Indian economy. On one hand, you've got the good news camp, right? They're looking at that massive GDP growth, the rate cuts. But then on the other hand, you've got the cautious crowd, pointing to slowing factories, inflation creeping up, and the rupee hitting a record low, almost 90.56 to the dollar. It's a total standoff. So all this economic back and forth, it set the stage for a massive tug of war between two really powerful groups of investors, each with a totally different idea about where India is headed. The only question was, who was going to pull harder? And the two sides in this fight are what we call the FIIs and the DIIs. You've got the foreign institutional investors. These are the big global funds, often looking for a quicker win. And then you have the domestic institutional investors, India's own heavy hitters. Think mutual funds, insurance companies, who are usually in it for the long haul. And wow, just look at this chart. It shows you exactly how ferocious that battle was. Look at that. Foreign investors were selling like crazy, pulling out a staggering 9,200 crore rupees. But the domestic investors, they didn't just absorb it. They went on the attack, pouring in more than double that, over 20,000 crore rupees. It was a massive show of confidence, basically soaking up all that selling pressure and then some. And look, we're not talking about a little bit of selling here and there. We're talking about massive institutional size moves. To give you an idea, one single US firm, GQG Partners, sold off a huge stake in JSW Energy, worth over 670 crore rupees in just one day. This is the kind of intense pressure the local buyers were facing all week long. Okay, so with all this chaos, all these forces pulling in different directions, who actually won and who lost? Let's break down which parts of the market came out on top. It really was a tale of two different markets.
Sectors like metals and realty, which love the idea of global growth and cheaper borrowing, they did great. But consumer-focused sectors, things like FMCG or fast-moving consumer goods, they got left in the dust. Why? Because investors were getting nervous about inflation and what that would mean for future profits.
Oh, and just a quick side note on the data we're using. The report this explainer is based on actually mentioned that some of the numbers, like for gold prices, looked a bit off. Maybe some reporting errors. And that's a great reminder, right? As an investor, you've always got to look at the data with a critical eye and, do your homework. So, after this absolute roller coaster of a week, the million-dollar question is, what happens now? Seriously, the market is on a tightrope right now, and it feels like it wouldn't take much at all to push it one way or the other. This quote from the original report really just nails it. It perfectly sums up that tension, that tug of war between the support from inside India and the storms brewing overseas. And let me tell you, that battle is nowhere near finished. So looking forward, there are 4 key things you're going to want to watch. First up, the next batch of Indian inflation data. That's going to tell us if the RBI's plan is actually working. Second, what's the U.S. Fed going to say next? That sets the mood for pretty much everyone. Third, the rupee. Where it goes is a huge signal of investor confidence. And finally, the big one. What do the FIIs do? Do they keep selling or do they finally start buying back in? And all of this really brings us to the final and maybe the most important question. The domestic Indian investor was the absolute hero this week, no doubt about it. But can they keep saving the day? Can they always be the ones to step in and buy when everyone else is selling? The future of the Indian stock market may very well depend on the answer to that trillion rupee question.